continue with our discussion on equities and its avenues as an investment option. So a couple of terms that are important for us to discuss now when we talk about equities are going to come now, which is the first term that we look at is something called as market capitalization. Now, what is market capitalization? The total market value of the company's equity is known as the market capitalization. How do you arrive at this number? You multiply the market price of a share with the total number of shares outstanding to get the value of the company. This is, in a sense, the money needed to buy 100% of the firm. 100% of the firm's equity. Remember, you might still have to pay for the debt of the company. But if you want to buy all the shares of the company, the amount needed is what is going to be equal to the market capitalization. So for example, market price of Infosys share is 1184. Total number of shares outstanding is 230 crore. When you multiply the share price with the number of shares, what you get is rupees 2,72,000 crore approximately, and that is the market cap, or MCAP as it is shortly called as, market capitalization or market cap or MCAP of Infosys, right? This will obviously change every moment as the stock price changes. This will change, but primarily the total value of the shares of the company that the market is attributing to a particular company is known as the market capitalization. Now, when you look at market capitalization, there is a classification of stocks or companies on the basis of whether their market value of shares is high, medium, or low, right? Now, remember that there is no hard and fast rule on how do you divide these companies, but typically you could divide them in three parts, which is large cap, mid cap, and small cap. The large cap companies are the companies with large market capitalization values. Usually higher than rupees 20,000 crore are considered as large cap companies. They are big businesses, risk is lower, they are stable companies, they have been here for a while, usually companies that are really large and hence have seen multiple business cycles. By virtue of this, the risk keeps becoming lower in this. The next set of companies, which is where you're looking at roughly anywhere between 3,000 to 20,000 crore of market cap, is known as mid cap companies. Why? Because they have medium market cap. So middle market capitalization, they're known as mid cap companies. These are usually upcoming companies. They're companies that might become bigger. Since they are a little bit smaller in size, risks are considered a bit higher as compared to large cap companies. So obviously, as you move lower, the risk increases. Mid-cap companies are mid-sized companies, typically your companies that are not very big but are also not very small, right? And then anything below this number, which is 3,000 crore in our numbers that we've taken, remember this 20,000, 3,000 is not sacrosanct or hard and fast. There's no rule around it. Some companies believe that 15,000 crore is the level above which large cap companies should be taken. Some believe 40,000 crore is a number above which large cap should be taken. We've just taken some numbers hypothetically. There is no rule that defines that 20,000 is the only value that can be taken. You could take 25,000 if you want. You could take 15,000 if you want as large cap. Right? Now, companies with market value of less than 3,000 crore are considered as small cap company. These are the smaller companies. They can become big. They may not be able to become big. Since they are very small, risks are considered to be significantly high as compared to large cap and mid cap companies, because these are companies at a very initial stage. So you don't know whether they will succeed or not. So the risk is much higher as you go from large cap to mid cap. So logically, if you are a risk averse investor, someone who does not want to take a lot of risk, you will invest in large cap stocks or companies around the large capitalization level. If you're looking at companies which are smaller for bigger appreciation, you'll have to take a higher risk there, right? Examples of large cap stocks: Infosys is a large cap stock.